Whatever stage you're at with your trading, it's important to stop and gain perspective before planning your next move. Take a break from the charts and join in the discussion with our hosts, Jason Graystone and Akil Stokes, as they share insights, opinions and expertise on all things trading. Grab a coffee, pull up a chair and join the Trader Coffee Break.
All right, guys, welcome to the Trader Coffee Break. It's another week. I'm Jason Graystone.
I am Akil Stokes.
And it's another week where we grab a coffee, pull up a chair and just get away from the charts and have a little bit of a talk, a little bit of a rant. That's not very good, Akil. You need to get some...
I know, I failed.
I see yesterday you've put the water in without the coffee. What was that about?
Yeah, I'll tell you what, I've been scared to go back and make coffee after that massive fail. I feel like I've disrespected everything. It was one of those days. I'm getting over a cold. Come on, cut me some slack, man.
So last week we was talking about adding a last week we was talking about what is a trading strategy, right? And we was going to talk about adding strategies to the portfolio, building out your playbook, and ever expanding kind of your edge. And we thought we'd step back a little bit, talk about what a trading strategy is. And we had a lot of good feedback about that. I saw a lot of great comments about that, and there was a lot of engagement there. So this week, we're going to talk about adding a strategy. So we're specifically talking about when you're trading one thing and you've got it down, you've got it on lock, and you're thinking of then adding another strategy to your trade plan. So I guess the first question is, why would you do that? Why would someone want to do that in the first place? There's a question, because Akil, you used to trade one particular strategy, right? So why would anyone want to add another strategy?
Well, very simple answer. Because as traders, we need to be trading at every single second of the day, or we don't count as traders. Boom, episode over. Seriously,
I was going to say something serious then.
Unfortunately, a lot of people think that way, though. Unfortunately, a lot of people will add just to add. Kind of the more is merrier. And it's funny, people don't look at the risk component of trading, and they think that, okay, well, I'll just add more strategies and I'll have more trades and more stuff to trade, and I'll just risk the same amount as I was before. And if you add all that together, you're risking more, so it does have a trickle down effect. But I know for me, I started off with trading a single strategy, and it was my approach because I was really reckless in what I was doing, and I just needed a straightforward disciplined path, and I needed to focus on a single thing and get good at that one thing. And after I got good at that one thing, and I started kind of operating on autopilot, I started to notice a lot of opportunities in the market that I wasn't able to take advantage of. And I know you're the same way. Like we're traders, and we're very disciplined, and we stick to how we trade. But we actually love the markets. Like we love the puzzle. So, we're always looking at charts, looking for opportunities, even if we can't trade it, where, we'll shoot each other idea. Hey, did you see that? Look at that. I can't get involved, but man, that's pretty cool, because we're always looking for different ways to approach the market, and adding a different strategy is a way to maybe attack the market in a way that you couldn't have before. So, again, using myself as a personal example, I'm mainly a counter trend trader, so I operate really, really good at, when levels of structure hold, or when price is in a consolidative stance. But I would watch these trendy moves, these breakouts, and just sit back and predict them and can't do anything. So it gives us an opportunity to take advantage of those type of opportunities as well.
So I know we joked and I kind of laughed at what you said about missing out, but to a degree it is for that reason. It's not that you have to be there every second of the day, but it's to introduce more opportunities, because the way that markets move is we're either trending or we're moving sideways, and that's it. So if you're just trading sideways movement, great, but for 30-40% of the year, you may not have an opportunity. And vice versa. So it does pay to have a toolbox I look at it like a toolbox full of tools for different situations. So it's like, and that doesn't necessarily mean I need to then spend more time trading. It just means I have a different strategy for specific situations, more situations. So technically it is more time trading, but it doesn't mean you have to be in front of your charts 24 hours a day. You can still build swing trading systems, longer term systems, but just in different situations. So when you was trading one and you kind of get to know one and you understand one, when did you feel was the right time to introduce a new strategy?
So for me, it's always a process. I felt like it was the right time when I felt like I was on autopilot. So I was completely comfortable in how I was trading. I wasn't making mistakes, or I was limiting the amount of mistakes that I made to, we're human, we're going to make one every once in a while, but
unconscious competence, right?
Yes,
just like
unconscious competence, running on autopilot. And it was just like, it was boring. And, whenever we talk about boring, it's boring in a good way, where it's like, okay, higher high, higher close, structure held, execute order, blah, blah, blah. And I felt very, very, very capable. And how about you? Is there
a
certain feeling that you had?
Same thing. So that kind of, it's almost like this is the natural next progression. It was like, this is second nature. I'm not really putting too much effort into this now. It's almost like clockwork. And one of the analogies I always use at our events and when we talk to our traders is about, if you were starting any other business, like a normal business, like a coffee shop, for instance, you wouldn't really employ 10 different members, 20 different members of staff on day one. Most companies don't do that. And the reason you don't do that is because there's too much to manage, and you're not happy with one of the positions, yet let alone all of the positions. So what tends to happen is, if you try and do that, is one, you run out of money, usually because you're over like you just said, you've got too many positions on, too much money at risk. Two, you just don't know how everyone performs, and you can't trust someone to just get on with it at that stage. So you're watching everything. And with trading, it's the same thing. I like to get a strategy in a place where I don't have to, watch it. It's like, right, I know how you're going to behave. I trust you. I know what the kind of, as we said before, you kind of get someone's resume or someone's CV. And if it's a good CV, you know that you can kind of leave them to it, and you know that they're likely to get a good result. Well, you want to get your trading strategy kind of, so you know that it's going to be a good result, right? And then you introduce another one while you're micro or macro managing that, then you get a new one in, or a new member of staff, as I call it. Like, the pairs are staff, or the strategies are staff. So yeah, it just feels right. If you feel like you're managing too much, I think you're not ready to introduce another setup. If you're missing setups, if you're doing too many human errors, like order execution wrong, still haven't quite, still not quite mimicking your back-tested data, things like that. That for me is what it's about.
And I know you speak a lot about, we're always doing not quite A/B tests, but evaluation of the strategy you're trading, whether it's like, hey, these are my perfect results, these are my realistic results. And I know many of you guys out there, you like to quantify stuff. If you can give yourself a kind of a set schedule where it's like, hey, I can only start adding or working on a new strategy once I hit a 95% kind of, good trade rate, or 90%, whatever that number is for you. And that kind of forces you, hey, if I want to do this next thing, I've got to get very efficient with doing this first thing first. And that's a good little cheat for you guys that need that motivation. Because I think there is a natural, maybe there isn't, I don't know, is there a natural tendency to add? Well, I think there is a natural tendency to add more, to want to add more. I don't know. Do you find that out there?
I think it just comes from, I think it comes from the need for growth, doesn't it? And need for more opportunity. So just a natural evolutionary kind of need for growth, I think, is what makes us want more and more. I always go from an investment standpoint of best and worst case scenarios anyway. So I always think, like, if you're testing a system and you're happy with the system, at least have the best case. If you was to go and pitch that to an investor and say, look, this is my results, they're going to want to see the best case and they're going to want to see the worst case, because they want to know what, where they're putting their money and what the best case, worst case scenario is. And the reason you do that is to give them security, risk security, and ease their mind. So if you can't do that to them, you can't do it to yourself. and you need to be able to do it to yourself. And that's really what it's there for. So by having that contrast of best case, worst case, instead of just having one kind of figure, you've got a bit of a band, a bit of a buffer to go, okay, well, yeah, it's not performing at its best, but it's not performing at its worst. And you stay in between that forever. It's like you just bounce in between that forever. So until you can get a system like that, then don't worry about adding another one. I suppose. Yeah,
it's funny while you're on that, talking about investors, it brings me back to the story when I used to manage money, and I learned, that was the first time I learned where that people with real money, risk is important to them. I used to go into a lot of those meetings thinking I'm just going to show them the best results and this is how much I made, and they can care less about that. What is your drawdown? Like, what is at risk? And another positive of adding a different strategies is that type of diversification. So yeah, I traded a very single type of way, and the markets they're somewhat seasonal. They kind of, things got weird when Trump went in the office because the Trump tweets introduced a whole new level of stuff. And then, their Brexit and COVID. So there's all types of weird stuff happening. But historically, right, summers are a little bit slow. September's used to be very directional, right? We look at summers as being a time where a lot of the traders are on vacation, spending time with family. There's not a lot going on. And then they kind of come back at September, and it's like a parent returning to their home where it's like, okay, kids, you kind of put this here, put that over there, and they start adjusting stuff. And you see these very directional moves in the market. Well, as someone that was trading mainly a counter trend type of way, I got destroyed every like September, early October for like a month straight. Now, overall, it didn't have that much effect on my return, right? Because, the months before that were fine. You just kind of absorb that month. But when you're pitching that to investors and they see like, hey, there's this big dip, although you can personally take that on, it doesn't really look good in the bigger scheme. So something that encouraged me to add a different strategy was I wanted to clean that up. How can I clean up my equity curve? I can either stop trading throughout that month, which wasn't something that was for me, because I always if it's a valid trading opportunity, I want to take it. It's a numbers game. I can't sit straight saying, hey, here are valid trades, don't take them. If I introduce something else that can take advantage of that directional time, it offers kind of a natural hedge. And you get that throughout the year with your different type of trading opportunities. And it ends up smoothing out that equity curve where, again, during periods of consolidation, like you mentioned earlier, you have a way to attack the market. Maybe your other strategy takes a little bit of a hit, but the one that's doing good makes up for it, and then vice versa. And you end up having that slow and steady, smooth equity curve, which a lot of newer traders, that's not appealing to them. But anyone that knows anything about money, that slow, steady, consistent grind, right? That's exactly
slow and boring.
Slow
and boring is what you want. Like slow and boring is profit. That's it. That's the name of the game. And what Akil was talking about when he said clean up his equity curve, he's talking about smoothing it out, because like even Warren Buffett and Warren Buffett and Charlie Munger, Berkshire Hathaway, they are by no means traders whatsoever. They are very, very passive investors. But even them, like I think when Warren Buffett was asked how his estate would, or how his trustees would manage his wealth for his wife and his legacy when he died, he said very simple: 90% stocks, 10% bonds. And the reason he does that is for the growth and the fixed income to smooth out that volatility. And that is it, right? He's adding that in just to add that kind of smooth equity curve. And it's very wise to do that. If Warren Buffett diversifies, I want to take at least a tip from that and do what I can with it. So I guess the next question is then, how do you go about it? Like, how do you go about introducing a new strategy? What do you look for? Is there, I suppose the first thing is, if you are volatile or you're not getting many opportunities, and when you get them, you're worried about missing them because they're like 5 a year or something, yes, that's a great indicator to potentially add another system. But how do you actually go about it? What's the process?
Well, you got to figure out what, like you said, you got to figure out the goal. What do you want to accomplish first and foremost? And there's so many ways you can do it. Like, do you want, if you are more of a passive swing trader, do you want to introduce day trading and have something that you can take advantage of the lower time frames? Or someone that likes actively trading, do you want to add that? Do you want to add something that again it takes advantage of different opportunities than your main strategy? Maybe even something that takes advantage of different pairs. I think you have to have a game plan, understanding what you want to accomplish, and then looking for a strategy that accomplishes that task. Because if you're adding something that is something that you're already doing, it's pointless. You also don't want to add something that contradicts it too much, because then you can run into that possibility of where you have conflicting signals. And if you're not if you don't have a solid trading plan, you're gonna not really know what to do.
And what I would say is definitely take into account, if you're testing these overlaying onto your existing system, your current system, make sure that you're actually going to be taking those entries, because if you're using the same account, you might already be in a trade. You might already, let's just say that 3 p.m. till 6 p.m. is your prime time for taking your first system. Well, all of the entries that come in between 3 and 6 on the second one, you might not be able to take. But if you've got some unrealistic expectation and you're fantasizing over these amazing results that you've just gone and tested, make sure that you're taking into account that you're not entering when you should be entered on your other system, if that makes sense, because you have to take all those trades out unless you're going to be right.
I've got a war story about that, man. It was I don't want to say it's the most embarrassing moment in my trading career, but so this is when I learned the value of what you said of either having multiple different accounts for different types of strategies, or having completely different portfolios, meaning strategy A is traded on this set of pairs, strategy B is traded on that set of pairs. I was day trading and swing trading at the same time. And I had the same portfolio. I didn't do anything different. And I remember I was in this long-term swing trade. I think it was Aussie dollar or Aussie Canada. And it was on like the daily chart. And this thing went into consolidation for 2 months. Like it just went like 50 pips in profit, 50 pips against you. It went up and down, up and down, up and down, killing me on rollover cost for like 2 months. At the same time, right, in the live trading room where we were day trading, we had I think we had like 10 wins on pattern trades. And like, you've been there before, like the live room is going nuts. It's one of those heaters you get every once in a while. Everyone's going crazy. Everyone's making money hand over fist, except for one person, this guy, right? Because I was stuck in this long-term trade, so I couldn't take any of the opportunities on that lower time frame for like 2 straight months. And then worse come to worse, I ended up losing the bigger trade too. And that was the kind of the reality check. Like, wait a minute, I've got to do something to separate these strategies. Because I didn't even think about the conflicts of like, what happens if I'm in a trade and I can't take signals from this, and I missed the hot streak. And unfortunately, I learned that lesson the hard way. But that's extremely important, is to prepare for that. You need to prepare to have your new strategy complement or work around your previous one. And again, that could be different portfolios. It could be different accounts. It could just be having rules that say to make sure they don't conflict. But that's extremely important. I think a lot of traders are going to get in trouble doing that.
Yeah, rules are definitely important around, like if you're trading similar setups. So for instance, if you're trading 2 different consolidation patterns, you want to have a rule whereby if 2 setups are kind of similar in the same kind of zone, what one do you take? And how do you create that rule? What one do you take first? Or is it the one that completes first, or is it the bigger one, or is it, you have to have those rules, because that's gonna, and you have to test those rules as well, unfortunately. And this goes back to multiple rounds of testing, just to give you peace of mind of the best case, worst case scenarios. And I think this is why most traders fail, because they just can't be bothered to put in the work to get those results. I honestly think that, like, people don't believe that you have to test stuff, and people don't believe that, like, I know one person talking about adding strategies, he just assumed because one setup worked or one pattern worked, he just traded the other patterns. Or just because one pattern was profitable on one pair, he didn't bother testing the other pairs, and he just added because it's not just adding a strategy, it's adding markets as well. And you can't just bolt markets on. Like, I've got multiple strategies that are not profitable on certain markets, but are on others. So you want to be mindful of that as well. Can you give any more tips on that?
just to piggyback on that, the same thing when you do your testing, you don't be so quick to bail. Like Jason mentioned, different markets operate differently. Different pairs within the currency market operate differently, right? We had a conversation about trend trading today, and we're talking about kind of differences between majors and minors. And some of your major pairs, your most popular pair, the euro dollar, it's not necessarily a great pair to trade with many strategies. But people assume it is because it's the most popular, it's the one everyone starts with, and they're like, oh, it didn't work on this, so it probably doesn't work on anything else. And you can easily have something that is tremendous. It just doesn't work on that type of market. But you take it over to an Aussie yen or something of that sort that doesn't have as much kind of influence from banks and institutional traders, and it's going to work like genius. And the success is earned. And I think the people that see success, those are the ones that are able to, like you said, invest that time and do the work and deal with a lot of these markets that don't work. Oh, this one does work. Okay, don't work, doesn't work. This one does work, and kind of pick out the ones that are successful and really make the most of that. Most people,
I know a guy who runs a team at S&B Capital, and he spent 6 months like testing a system to put into their portfolio, and after 6 months he just wasn't happy with it, so they just scrapped it. 6 months of work went into that, and it just got scrapped. And that's, guess what, they haven't lost any money other than his salary maybe, but that's it. And kind of just to wrap off on that, I guess what I would say is it's good to have a trending system. It's good to like, if you was to develop systems, I would say there's nothing wrong with just trading off of structure. Like Akil is a heavy structure-based trader. But if you're going to add systems, have a main system. Like, I'm trend continuation, really, right? That's my thing. I do trade reversals as well. So I have there are certain levels in the market where I can take advantage of a strong reversal and I can capture profit that way. And then I'll have a consolidation system. And that's taken years to put into a portfolio and a trade plan where I can manage it, and I'm not emotional, and I kind of, it's second nature. It's like driving a car, and it does take a long time to get to that phase. But if you're going to think about it, have one main system and then consider those other two as your secondary systems. And that's what I would advise. And then you've got opportunity everywhere.
I would add one more thing. Think towards the future. We spoke about this before, about always, creating your trading plan and whatnot around your life, but think where you want to be around the future. So, a good example, I started trading before I was married, before I had kids. I had nothing better to do, but, be in front of my charts for whatever hour. So I liked day trading because I had nothing but time. As I started getting kids and got married, there were more tasks that I had to do or wanted to do, even if it's something as simple as like, hey, I want to go play with my kid outside, where it's like, well, if I'm a slave to my chart for 4 hours a day, I can't necessarily do that. Think about how much involvement you want to be in the future. So again, something I'm working on right now is something that is much longer term, because although I love actively trading now, I love running live rooms, I love doing the kind of the intermediate swing trading stuff, there's going to eventually come a time in my life where it's like, hey, I want to take advantage of my time in a different way. So I'm willing to invest the time right now, and I've been testing stuff for 2 or 3 years to develop something that I can use 10 years from now in order to live the life that I want to live. So don't be in a rush. Think about what because it does take time. Think about where you ultimately want to be in the future and start preparing for it now. That way, by the time you get to that point, that thing will be up, running, and ready, and you can easily make that transition instead of kind of needing to kick the can for a little bit on that.
Great points. I think it just pays with anything in life to think as far ahead as possible in terms of time and space. And if you think that way and you ask those questions, you're going to do all right. So I think that was a valuable session. Anything else to add?
Nope. I just want to get healthy. Now I feel bad because we were
He's got
talking
the sniffles.
pre-show. You're in the weight room. I haven't done anything in like a week. Now I feel like a lazy bum, man. Appreciate it,
Man.
Go
Well,
hide these-
you're nearly there.
Hide these
Nearly
guns.
All right, guys. Well, hopefully you enjoyed that. Let us know how you add strategies. Let us know if you've got any other questions that we've missed out on this topic. And don't forget to subscribe to the channel.
Oh, we got a workshop coming up.
Yes, we do have a workshop.
We're so bad at being salesmen, right?
We are so
we
bad
got
at
a
being
5-day we got a 5-day free online trading workshop coming up on August 9th, man. This is bridging the
We
gap.
do.
Be there.
We
Make
do.
sure you register. It's great if you can show up live. I think the experience is so much better if you're there live and you're able to interact with us. But we also understand if you can't. So each session is going to be recorded, but you need to register. That way we can mail you the recordings after each session is done. But it's going to be, if you haven't attended one of our week-long events, it's like nothing else out there. I guarantee you're going to get more from this workshop than you're going to get paying for some of the other stuff that's out there on the internet. So we forget to promote it because it's kind of second nature to us right now. We just love talking trading. But yeah, show up to that. We'll throw a link in the description box.
We definitely will.
And whatnot.
Yeah, the link will definitely be below. And it's 4 days plus another day of dedicated Q&A. And as Akil said, the energy is always very, very high. You get a lot of value at our events. We put a lot of effort into them. And go and register for a ticket. And until next week, remember, do less to do more, and we'll see you then. Take care.
Thanks for joining us for the Trader Coffee Break. Be sure to like this video, subscribe to the channel if you haven't already, and don't forget to hit the notification bell to never miss a live discussion. Follow our hosts on social media. And remember, do nothing to gain perspective on everything. See you next week.